Hello and welcome to HiWayFX market news for March 21st, 2016. On Monday, we're observing a technical correction in the Euro-US pair. The main currency pair trades below the mark of 1.13. Last week, the euro climbed to the level of 1.1340 thanks to weakness of the American dollar on forex market. As Bloomberg notes, the dollar headed for its steepest three-week slide in more than 4 years as an increasingly cautious Federal Reserve spurred analysts and investors to reassess forecasts for the greenback. A Bloomberg index tracking the US currency against 10 major peers climbed from an 8-month low reached on Friday, 2 days after the Fed officials unexpectedly cut projections for interest rate increase to 2 this year from the 4 they estimated in December. Macquarie Bank Ltd and Morgan Stanley, two of the world's top 10 currency forecasters, are highlighting the risk of more dollar weakness. The fact that they didn't raise rates and won't back expectations for a future increase in 2016 has obviously hurt the US dollar, said Derek Mumford, a director at Rochford Capital Pty in Sydney. That can continue in the very near term. The resistance levels for euro are 1.1284 and 1.1307. The support levels for the euro-US dollar are following: 1.1253 and 1.1217. Last Friday, the Australian dollar reached an 8-month high of 0.7680 US dollar. This morning, we're observing a technical correction. The Australian dollar-US dollar pair trades below the level of 0.76 by losing 0.2%. The Australian dollar-US dollar pair got support due to rising prices for commodity and weakness of US dollar on forex market. In addition, the strong data from Australia also support positions of the Australian dollar. As Bloomberg notes, Australia's economy grew faster than forecast in the final 3 months of last year, prompting investors to pair bets on monetary easing and making the local currency one of the chief beneficiaries of recent weakness in the greenback. The expansion in gross domestic product was driven by household spending and increasing home building, while employers added the most jobs on record in the final quarter, as industries including tourism and education capitalized on a lower currency and weak wage growth. However, the biggest fund, BlackRock, is not buying the Aussies rally. Stephen Miller, head of fixed income for Australia branch in BlackRock, is sticking with the bearish call he's maintained for about 3 years. He sees the Aussie plunging at least 14% back past the 7-year low it hit in January. Miller is skeptical about signs that the local economy may have turned a corner after absorbing the shock of slumping mining investment and commodity prices, Bloomberg writes. The resistance levels for Australian dollar are 0.7607 and 0.7664. The support levels for the Australian dollar-US dollar pair are following: 0.7560 and 0.7528. Last week, UK Brent oil rose by 2% by reaching 4-month high of $42.50 a barrel. On Monday morning, we're observing a technical correction. Brent oil trades near the level of $40.50. As Reuters notes, global oversupply in oil had knocked crude prices down from mid-2014 highs above $100 a barrel to 12-year lows earlier this year, bringing Brent to around $27. Over the past 2 months, prices rallied to above $40 after the Organization of the Petroleum Exporting Countries, the OPEC, floated the idea of a production freeze at January's highs. The combination of declining oil output, smaller crude stockpile buildings, and surging gasoline consumption in the United States also helped the recovery, although some analysts said the rally had been overdone. The resistance levels for UK Brent oil are $41.10 and $41.70. The support levels for the oil are following: $40.30 and $39.50. To get more trading ideas, like us on Facebook, follow us on Twitter and Pinterest, and subscribe to our YouTube channel. For more information on all the key financial news around the world, please visit our website, HiWayFX.com. Thank you and have a good trading day.